live. News 8's Good Morning Connecticut starts now.
It's 5:30. Nice to have you with us on Good Morning Connecticut. It's 5:42. Welcome back. For the first time in years, as we all know, the price of gas in Connecticut is cheap, under $3 a gallon, well under in some places. Joining me now to talk about this and the impact on our economy is Denis Horrigan from Connecticut Wealth Management to talk about the price drop's long-term effect on the economy. Nice to have you here.
Thanks, Jim.
It's great to talk. Gas prices are always puzzling to people. This is good puzzling right now, more than when it was $4.70. But tell me why this drop is happening.
Well, it's been stunning, right? The price of oil has fallen 45% or so in about 5 months. And it's a classic economics 101 lesson. You have increasing supply because in the United States there's been an energy renaissance where new technologies and new techniques have actually caused a huge glut of oil to come out of the United States.
Things like fracking.
Fracking, right. Exactly. Not all of them are popular, but a huge supply increase because of the United States. Demand has dropped around the world. You've got slowing economies in the Far East and in Europe. Decreasing demand, increasing supply, economics 101, prices have to fall.
All right, so here we are with this very reasonable price of gas, certainly compared to what it was. Is it helping our economy? It would certainly seem to make sense that the answer is yes. People have more dollars in their pocket to spend.
Yeah, absolutely. And if anybody filled up their tank this weekend, they saw that it was a lot less expensive now than it was 5 months ago. In fact, gas prices have fallen about $1 a gallon since the summertime. Well, what that means to the average consumer is it's about an extra $50 in your pocket every month.
It's more money to spend on Christmas presents, to take the example of the moment.
You got
correct?
it. Timing's pretty nice.
So it's an economy plus, you would think then, and yet we're watching day by day as the stock market tanks. What's going on?
Yeah, that's a puzzling one. So it's very good for the consumer, without question. Lower oil, lower gas, it's good for the U.S. consumer. But what you saw is, as I started at the top, demand has decreased because in foreign countries, their economies are slowing. You have recession in many countries around the world right now. What people are starting to catch wind of is maybe the slowdown in the economy in foreign countries is worse than we thought it was. So as a result, last week was the worst week in the stock market for 2014. We know that now this is a global economy. When one country sneezes, another country can catch the flu. That's the concern now.
So what are the possible downsides of this? We all celebrate having this much less expensive gas, but what are the downsides geopolitically?
Well, right, with the good comes the bad. And I guess the concern is, I'll use Russia as an example. About 50% of Russia's finances are funded through oil sales. Well, if the price of oil falls 45%, and Russia is trying to fund their social programs, right, and they can't, civil unrest could actually break out. And you never know, but that's a big concern that we have, is the impact socially and civilly in all these foreign countries. It could be pretty dramatic.
Yeah, Russia's always a wild card. Final question. People are very cynical about the way oil companies, arrive at their prices. And you already hear people saying, oh, by the time the summer driving season is here, it'll be back above $4. They'll make sure of that. Is that a reasonable fear?
Most people expect at this point that oil prices will stay low through 2015 and gas prices will stay low through 2015. But there is that supply and demand thing is always going to drive prices. And if the OPEC nations decide to cut production, therefore the supply is cut, you can see oil prices increase.
Certainly seems as if we have a little more control over our own energy destiny right now than it did even a year ago. Thank you very much, Dennis.
Nice.
Stick around and we'll talk some more in the next hour?
Yes, sir.
Fantastic.
Thanks.
All right. Chris, over to you.
Jim, thank you. It's 5:46 right now.
All right, Chris, it's almost 6:24. Who is not loving looking up at these gas station signs and seeing the prices below $3? It all seems quite unbelievable, doesn't it? Well, joining me now is Denis Horrigan from Connecticut Wealth Management. You don't specifically focus on the oil industry, but you cover it, as they say in your business. Why so cheap, Dennis? How in the world did we get down to $2.70 gas?
Well, it's headed down probably to $2.50, and it'll probably stay there through 2015, by the way. But it's a classic story of economics 101, where you have increasing supply and decreasing demand. Supply has increased in the United States. We are now the largest producer of oil in the world.
That is worth pausing to emphasize right there. We, the United States, are the largest producer of oil, more than Saudi Arabia, more than Russia, more than anybody.
Yeah, well, the technology, or the energy renaissance, has been fueled by, no pun intended, been fueled by technology and by new techniques to help us extract oil cheaper from the ground. So it's really added to the whole supply story in the equation. The demand side, Demand has slowed down around the world, other than the United States, by the way, but economies around the world are really struggling.
This is doing things. This is so impactful. It's doing things like increasing car sales because people are saying, "Hey, I can get a new car on these gas prices." So why then is the stock market going down? It plummeted last week, which makes you kind of gives you a cynical eye, like saying, "Well, all the consumers, the 99%, if you will, are benefiting here, but the investor class is not impressed." What's going on there?
Well, you're right. November we had retail sales that exceeded expectations. We had auto sales that exceeded expectations. Consumer sentiment that just came out last week was the highest it's been in 8 years. So the consumer in the United States is doing great. The stock market last week reflected the fact that the weakness in many of the economies around the world, perhaps it's worse than we thought it was. And now the concern is that going to spill over into the U.S. economy?
What do you see happening in the future? You already mentioned that prices are expected to stay low throughout the year, but to even take a grand picture, and maybe I'm getting carried away here. Have we reached the impossible dream of more energy independence where we're not slaves to these oil prices as much anymore?
Yeah, we definitely are there in terms of production. I think policy is a whole nother issue where we actually haven't been able to sell our oil on the open market for decades, and we just started selling into the open market last year. That will give us even more independence. But the fact that we are the largest oil-producing nation in the world, that shocks a lot of people.
It's a little bit of an untold story
For sure.
In a way, but when you talk about these prices staying where they are and going even lower through 2015, this is real. It's tangible. We're not going to wake up from some dream here and look up and see $4.70 on those signs anytime soon.
Yeah, and it's perfect timing, actually, right? We're right here in the holiday season where people can take that extra money that's now in their pocket. They can go to the mall, they can buy some more stuff, and that continues to kind of drive the economy. With the consumer having more money to spend, that helps companies sell more product, increases earnings, they can hire more people. It adds
to the holiday mood.
It does.
Is what it does. Dennis, thank you so much from Connecticut Wealth Management. We appreciate your insights on this big question right here, and good driving, everybody. Hey, a big deadline is today for health care coverage in Connecticut.